Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
All right, folks. So if you've been in and around real estate and you've been looking at raising private capital for deals, you've heard a lot of different things. And you might have even heard this whole idea of tokenization and raising capital differently. Well, today we got a special guest zooming in from the beautiful city of Spokane, Washington, not too far from my stomping grounds. Tyler Vinson has a ton of experience in real estate the traditional way, but more recently, he's gotten into tokenization, raising capital for real estate in a different fashion. So Tyler, welcome to the show. Great to have you.
Dave, I appreciate you having me on and looking forward to the conversation.
So give us a quick little 1-minute overview of your real estate investing experience. How did you get started? What are you focused on? What has that journey been like up until like the tokenization thing? Then we'll spend more time on that.
Yeah, sure. So about 25 years ago, a buddy of mine came home from college and he said that a couple of his friends were buying apartment buildings, and I kind of decided that sounded pretty cool and maybe I want to do that when I grow up. So he ended up shortly after dragging me to one of those, seminars at a hotel. Yeah. It wasn't that great, but it did lead us to decide to go out and buy a couple of duplexes straight away afterwards. And so started buying some duplexes, multifamily. And then over the last 25 years, just kind of evolved from I've done it all: single family hold, single family flips. Most of my career, small multifamily. Started to really get into creative real estate. That included, private investors, and it included seller financing, and then ultimately included syndication, where you bring a bunch of investors together to buy larger investments. And that was really the road that led into where I'm at now with tokenization, as a real estate investment background.
Okay, very cool. So when it comes to the syndication side of things, how long were you doing that? What did that kind of look like as far as the number of projects you were involved in? How much capital did you raise the traditional way through syndication in the past?
Yeah, through what we call syndication, when we're doing securities and maybe doing something like what we call a Reg D 506C and bringing investors together that way. I've actually just done a couple of those. Most of them were through joint ventures, where it was myself and maybe 2 or 3 other investors. And some people call that syndication. I call it joint venture. Yeah. The syndication that I'm talking about is where you might advertise for investors outside of your network. But personally, as a principal for investment, I've been involved in over $100 million worth of real estate deals and transactions.
Okay, good. So you got a good background, good experience with traditional syndication and bringing on limited partners and raising capital from retail investors. So that's what most of us kind of are familiar with, and joint ventures. Now you've kind of switched things over to a different way of raising capital for real estate through tokenization. And I've heard that term, and I've, skimmed the surface of it and had a few other people talk about it. And I nod sagely and really don't have the faintest idea what the hell that means. So walk me through it, Tyler. What is tokenization when it comes to real estate investing?
Yeah, absolutely. I'm going to jump to the end and then circle back to the beginning. What brought me into this is the fact that real estate investments are illiquid, and they don't get the opportunity to trade in fractions like stocks or more recently crypto does. And I believe that very much so, and now the rest of the world does too, that is how real estate will trade. So let's back it up and say, well, what the heck is this tokenization? There's no need to overcomplicate it. Tokenization simply means those ownership components. So most people buy real estate in an LLC. And if they bring investors into that LLC, they sell them a certain percentage. Let's just call them LLC ownership units or shares, right?
Yep.
So what we do when we tokenize is we simply make those shares or give those shares or those ownership units a digital component, a digital ownership component that's recorded on the blockchain. So it still has all the infrastructure of traditional, right? And really operates the same way. We're just giving it the enhancement of digital ownership, which allows it to move around much more freely. Another way I like to describe it is similar to like if you have a really large gold bar, right? And that's similar to real estate. It's large, it's cumbersome, it's kind of difficult to get in and out of, right? So if you have a really large gold bar and it's difficult to get in and out of, when we tokenize it, it's like taking that same amount of gold and breaking it into 1 million gold coins or tokens, and each investor gets to hold their own amount of gold tokens. And now it makes it much easier to move it around or trade it. And they don't have to wait for that syndicator or that sponsor to sell the entire property or do cash out refis, or really they're normally just locked in there for, half a decade to a decade, or sometimes even more. And that's really the point of tokenization, is to enhance the real estate investments that we're doing. It gives it that liquidity pathway for those that own it. And now it gives it access to those that normally wouldn't be able to get into the big gold bar, if you will. They may be able to buy a gold coin or a gold token or two, but it was much harder to get into the whole gold bar.
So what's the difference between tokenization and crowdfunding for real estate, or is there?
Well, we would get into securities exemptions a little bit to give you the technical answer. So let me just go kind of high level, and if you want to deep dive that, we can. So crowdfunding, when you raise capital, and the listeners should know, often when you raise capital, you may be selling a security, whether you know that or not. So you need to be really aware of that. So if you're raising capital for a real estate deal, and you're creating a security, you either register that with the SEC like a public company does, which is really expensive and time consuming. Or what we do in the real estate industry is we find an exemption to that registration to be able to raise the capital. And that would be like that Reg D 506C we talked about earlier. Well, crowdfunding is an exemption called a Reg CF. And it's got all these certain rules around how you can raise up to $5 million with this Reg CF. I'm happy to talk about that if you want. But what we normally do is raise under that Reg D exemption, which gives a lot more latitude to our clients and what they're doing. So you could raise under either exemption. There's just different rules to the amount of money and who can participate and what that looks like to be able to resell even on a secondary market.
Okay, so maybe walk me through a real example of a project or a deal that you've been involved in with tokenization and kind of how that looks.
Sure. I'll just talk about one of my own projects. I've got a Class A storage facility here in Spokane Valley, Washington, and we chose to tokenize that. And really, it was as simple as taking the legal documents, the security documents that we talked about, that give you the exemption, and we give that a digital ownership component. So it's some computer code, if you will. And then we record it on something called the blockchain. And you don't really need to understand what a blockchain is. It'd be like trying to understand how the internet works. You just need to understand that, the tools live on top of it, right? That's really all you need to know. But once you take that ownership and put it on the blockchain, then it gives you the freedom to do things like list it on what's called an ATS, alternative trading system, but it's really just a marketplace. The stocks and more recently crypto they trade secondarily. Almost anybody can get online and buy those, but that really hasn't been the way real estate works. But when we give it that digital ownership component, it allows for that. So on the storage facility, we took those legal documents, we tokenized it, we recorded that, computer code on the blockchain. Now, nothing changed underneath the operations or distributions or the legal. In fact, I have an 89-year-old investor in that project, and the first thing he said is, well, what's going to change with this tokenization? What's going on? How's it all going to work? And I said, nothing, unless you want it to, right? I mean, this is still fundamental real estate, fundamental operations and all of that. But what some of us have chosen to do, and myself, is you can list it on a secondary marketplace and sell in part or whole. So if you wanted to harvest profits, maybe you wanted to diversify into another deal, or maybe you had a life event. Normally, you're stuck in that deal until it's sold, or maybe there's a return of capital through a cash out refi. But now we each hold our own ownership, like the gold token example, and we can choose to sell one piece of ownership all the way up to all of the ownership in a marketplace. And there's a lot of reasons to tokenize, but that is really the primary one, because the future economy. Yeah, exactly. There's not been a pathway to liquidity. The future economy is digital, and now real estate can participate in that as well.
So with this example of your self-storage facility, how much capital did you tokenize within this? Give me an idea of numbers, and what's like the initial number of tokens that were made available, and how much, just kind of fill in the blanks for me there, Tyler.
Sure. So we tokenized all of the shares. There were 4.4 million shares, so 4.4 million tokens were created. The value is more than that. The value probably sits at about 6.5, maybe 7 million in value. So each of those, you can do the math, and each of those tokens are
so each token is $1. But initially, when you first released it, was it one token, $1, or how did that look as far as the value?
Yeah, that's normally how we do it. When we tokenize for our clients, for example, most of the projects will tokenize one token equaling $1, and that's the valuation of the project.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Okay.
All right. So I'm getting that. So it's 4.4 million for this project. 4.4 million tokens is what you got started with. Who could buy those tokens? Who was allowed to, or who had to, how did people have to qualify to be able to buy those tokens, if at all?
Yeah, that's a great question. And that's what is a real game changer, because when I first raised capital for this syndication, you had to be accredited. It's accredited investors only to get into, like a Reg D 506C. But once we listed on the secondary marketplace, there's an exemption for resale. We don't need to get into it, but it's called Rule 144, and it's that resale exemption. And what's really cool in that resale exemption on the secondary market is if it's an ATS, you can sell to non-accredited, and that's what changes the game. Now, those folks that did not have access, or maybe did not have the minimum capital to invest, can actually now invest in those type of deals. And it's really just an identity verification to be able to qualify on that secondary market. It's called KYC, know your customer. There's an AML, or anti-money laundering, but really it's an identity verification. And you create they call it a wallet, but it's just like creating an online account for any of these investment firms that you might have an app for. But you just create an account, you go through the identity verification, and now you have access to the projects that are listed on that ATS or that secondary marketplace.
Okay, cool. I'm getting my head around it a bit there, Tyler. So you're doing a good job explaining it. Now, from an operator point of view, so the guy or the gal that's looking to raise the 4.4 million to buy this property, okay, great. We've decided to tokenize this, raise capital via this methodology, 4.4 million. How do we kind of go from that to people actually buying the tokens? Like we put it out there, but how do we generate the other side of things? Like when it comes to syndications, you're meeting people, meet and greeting, having conversations, doing presentations, getting people to wire you checks for $50,000, $100,000, $200,000, what have you. This, now we got 4.4 million things we got to get sold. How do you get them sold? How do you promote this kind of a investment with this tokenization?
Yeah, it's a great question. Bear with me while I unpack it a little bit.
Yeah.
What we were just talking about was a secondary market, meaning that you already have the asset and you're doing resale. What you're asking about is the primary raise, the initial raise.
Yeah.
And so the answer to that question is the same way you normally would raise for a syndication is all in play. Now, on the secondary market, you're right. You're probably not having lunch with all those investors. It's made to be automated. It's much more transactional. But if somebody's going to write a couple $100,000 check, you may still, go to lunch with them in the beginning. But the real difference here, Dave, is not only do you have all the traditional tools to raise capital in the first place, but now it actually goes onto an online marketplace where anybody in the United States, in fact, really globally, but we'll just, for the sake of this conversation, say anybody in the United States can get online, like we have a marketplace on RE Tokens, for example, and go view the project. They got to, go through the create an account and stuff, but they can view the project, all the details to it, and invest right there online. Since it's fractionalized that way, there's much lower minimum. So let's say you don't know the owner operator of the project and you just want to dip your toe in for $10,000, let's say, or you want to invest in a few different projects. That normally really wasn't possible in the traditional way. And syndicators probably wouldn't spend a bunch of time trying to raise $5,000 or $10,000 checks. But online, it's a very seamless, automated type process where the investor can get all the details and information and the PPM and everything they need about the project, and they can just click a few buttons and be able to invest. Ultimately, what happens is the money leaves their account and those real estate tokens or the ownership goes into an account that the investor owns. And what's really cool about that is in the traditional way, your ownership is just told to you on or maybe you have a subscription agreement or you're on a spreadsheet or something. But now, since it's tokenized, you actually can hold that ownership in your account or your virtual hand.
Who would have thought that these tokens would be actually more substantial, tangible, so to speak, than traditional? Okay, yeah,
right. Yeah.
But getting back to that initial raise, so for example, the 4.4 mil that you're raising for that self-storage facility. Quite often, syndicators and whatnot, they're under a bit of a time crunch to raise the capital to get the deal done ASAP. How does that work with the token side of things? Like I get it. You get your initial investors on board. Then once they're on board and you're fully funded, then they've got the freedom to sell their tokens on the secondary market, right? But that initial push, how does that typically work?
Yeah, the initial push is going to work like it does traditionally. This is not a magic pill or a replacement, but it is an enhancement. Yeah. So you will do your traditional playbook that you have, and I'm happy to talk about how I've raised millions of dollars that way. I'm happy to talk about what that traditional playbook is like, and I definitely suggest they, execute that, or we also own a broker dealer too, and they can assist with that. But staying with the high level general information, you're going to run your normal how do you raise capital playbook.
Yeah.
And in addition, we're going to list that online in the marketplace. So it's more of an enhancement and an addition to that capital raise than it is a replacement strategy.
And is it possible to do a combination? So is it possible to tokenize part of a real estate deal, but not necessarily all of it? Or is it kind of all or nothing?
Yeah, you can tokenize whatever amount that you want. And the most common thing we'll see there is if somebody's got 50 or 60% debt on it with the bank, they may choose to only tokenize, 40% or just the equity portion, if you will. And we've actually seen that in reverse too, where people have, large commercial loans coming due. It's not favorable to refinance them. So they want to go out there and raise the equity to be able to cash out that loan and not be in a refi position with the bank.
No, that's fantastic. Hey, you know what? Good job explaining it. I think I definitely have a way better idea now than I did before. So thank you for that. You help people do that. You do this and you help people get this done as well, other operators. So who are you looking to connect with these days, Tyler?
Yeah, two groups. One would be, of course, real estate syndicators that have these projects and want to list them on this secondary marketplace or maybe raise capital in the first place. But right now, in particular, we're screening great deals to list on the ATS as that launches this summer. So real estate syndicators. And then the other side would be investors, investors that can invest in these projects. And actually, as a company, we're raising capital. So you can even own a piece of RE tokens itself right now.
Perfect. And if people want to connect and find out more, where should they go, Tyler?
Send them to retokens.com. That's our website, retokens.com. And you can get anywhere we talked about from the website there. And you can get some good free downloads.
Fantastic. Hey, Tyler, thanks so much for explaining that. I really appreciate that. Good job.
Absolutely. Been a pleasure, Dave.
All right, everybody. Take care. We'll see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.com.